On open exchange company results, Afrimat reported a 32.5% increase in first half revenue to 671 million rand. This is the open pit mining company. It provides construction and industrial materials. Saw headline earnings per share up 17% to 34 cents. And joining us for more is Andries van Heerden, who is CEO of Afrimat, and Gary Boyson now, who is at Vanaani Private Clients. Let's start with you, Andries, to talk about those results. I must say, just given where the economy is and given where your kind of sector is, they seem to me to be surprisingly good.
Yes, David, thank you very much. We are reasonably satisfied with the numbers. We focused quite strongly on the basics of the business. We incorporated a new acquisition, and all in all, we're very happy. Very good.
Gary, in this sector, what's your assessment of an Afrimat and in the broader construction sector?
No, I think sector overall has been sort of very disappointing, and Afrimat really has been one of the standout companies in it. It's actually one that we do hold in our small cap sort of emerging portfolios. Yeah, I think looking at your share price, it's fantastic. I mean, up sort of 58% for the year. They're doing very, very well. Yeah, the one thing, I see you guys are trading under caution. I mean, your balance sheet is very strong even after the clinker deal. I noticed also you've got Infrastores trading under cautionary as well. I mean, you're obviously looking at more acquisitions. Any sort of like info on that acquisition strategy going forward?
Yeah, we have a very strong balance sheet. We're very cash generative at the moment. So we are looking at some opportunities that fit with our long-term strategy, evaluating certain opportunities right now to see how we can expand the business further, grow on the strengths that we already have operationally and also financially, and to create a much larger company over time.
What would be the things that have been toughest for you? I mean, a 58% increase in the share price, good by any measure, but it can't ever be easy.
Yes. Yeah, especially looking at the first half of this year, I think the most difficult part internally for us, we also had a certain part of our business, our KZN operations, were out on strike for almost 5 weeks, which is extremely painful and very expensive. Fortunately, it was only isolated to that part of the country, and I would say that was the biggest challenge for the 6 months. Yes, and the results could obviously have been a lot better if we didn't have that in our business.
Issues like electricity, cost inputs, the road freight strike. I don't know if a company like yours would have been affected by that.
Yes, it was. Yeah, the road freight strike hit most of the impact was after the August. End of the reporting period, so yes, but it did impact us to a certain extent, especially in our Gauteng operations. The cost pressures, fuel specifically, the diesel price, had an impact, yes, and it takes a lot of operational control to make sure that you keep that under control. And I think the guys have done well.
Prospects, this time next year, we're going to see a similar increase in the share price, would you say?
Our job is to manage the business. The share price will look after itself.